to the Tin Hat Money podcast with me, Jasmine Birtles. And today I'm joined by Tom Winnifrith, who is the founder and editor of the marvelous shareprofits.com website, which speaks the truth to power and gives you all the news that's happening in the city, the news that you need to know. And in speaking the truth to power, Tom has had all kinds of attacks, but he's still going and he's still giving us the truth. Tom, welcome.
Thank you very much. Yes, we've been running Share Profits now for 11 years. And I have on my wall death threats I've received. I've got an enormous connection of lawyers' letters. And when we get a lawyer's letter from a crook, our natural response is to send one back saying, "See you in court, bitches." And we occasionally do see them in court and we win. And the aggression that you get on chat rooms and bulletin boards is just unparalleled. If you say shares in all these rubbish little companies are great and they're going through the roof, they love you. Okay, they're going to lose all their money in the end, but they love you. But if you say, well, you do know the accounts are crooked, or that one of the guys behind this has served time in an Italian jail, or something like that, they say, oh, you're just making it up. You don't know what you're talking about. And then launch into personal abuse. Or, they gets worse. They do have, especially in private Telegram groups, they have discussions about hiring a hitman to have me killed. Mm-hmm. Or there was a great plot to get my poor wife sacked from her university. They go after one of my ex-wives has been attacked. Someone hired an ex-Israeli army soldier to come and harass me. I mean, this is the level people go to when you challenge what is the sort of narrative.
Well, yes, and when it comes to, as you say, the narrative, you are really good at attacking groupthink. What do you mean by this?
Groupthink, very kind of you to bring that in. Groupthink, my late uncle, the journalist Christopher Booker, wrote a book on groupthink, which everybody should order. I'm not the heir to his military estate, so I have no financial interest, but it's just a good book. Groupthink is when you get a collective view about something, and it's everyone gets sucked into it. So one collective view was, for instance, during the COVID scandemic, that you were told that you had to wear a mask and you had to engage in social distancing, and that would stop you murdering someone else's granny. And the media got the political class were united. It wasn't a matter of do we disagree with masks or lockdown. It was how strict it should be. And here in Wales, of course, I'm 30 yards from England, and you'd have one set of rules over the border and one set of totally mad rules here. And the media, so there was a groupthink amongst the political class, but amongst the media class and actually amongst the population as a whole, going out and banging their pots and pans for the NHS. And on that one, I looked at the data, and the data was very clear. You could look at mask usage in, for instance, 3 contiguous American states, and they had different patterns of compulsory mask wearing and social distancing. And you would have thought, if the groupthink was correct, that those with the strictest masking, there would be a trend. But there wasn't. And there were similar studies you could do with Austria and Hungary, or indeed with England and Wales. We had stricter COVID rules, and guess what? We had more people die of COVID. And so the data was obvious. But if you challenge the groupthink, I challenged it on my local village Facebook page, and they had a sort of 2-minute hate of me for daring to challenge it. And one of the things was, but you're not a doctor. And I go, no, I'm not a doctor, but I've spent 30 years looking at data, and I can look at the data, and it's very clear. Your mask things are nonsenses.
It does seem to be it that there is an anti-truth movement, a pro whoever's speaking loudest and biggest, as you say. How does this affect the way that we invest then?
Well, I think one of the clear group thinks over the past decade has been what's called ESG, environmental, social governance, or DSI, diversity, something, whatever it is, DEI, diversity, equality and inclusion. The idea that you need to enhance the career prospects of women, people from ethnic minorities, and of people of different sexualities, or one of the 108 genders or whatever happening. And that you need to do that. And it was born of the belief that if you do that, not only is it a social good to do it, but actually it improves economic performance. And that's the groupthink. Now, firstly, is it necessarily a social good? If you have, is it necessarily good that you advance people on the basis of gender or ethnicity or whatever? Not really, because what you want for a capitalist society to work is for people to be advanced on the basis of ability. You want to have the best people. And that's, by the way, is the way that the city always worked. When I joined the city, which is, in the black and white era, it was one of the places in London where you could be openly gay. And the reason you could be openly gay is because they didn't care who you slept with at night. They just want to make money. And so they were quite happy to have gay people and women and people from minorities. It was all about making money. Yet the city is sort of lambasted as a place of evil, and other places aren't. So is it necessarily good for society to have these things? No. Does it lead to outperformance? Now, this is the real killer. You have been told, and I remember listening to the BBC, which obviously is groupthink and wrong on everything, and it was saying having a diverse workforce leads to outperformance. That's a given. BBC is saying it was a given. We don't need to debate it. It's a given, and therefore we should do it. But it doesn't, you see. What the data which is used is very there's actually been a very recent study showing it actually leads to underperformance. But I think what caused this is that technology firms in America tend to have a more diverse workforce than, let us say, oil companies or metals companies. Over the past decade, tech stocks have gone through the roof and old economy stocks haven't. Does that necessarily mean that they're better investments? No, it just means the market has these mood swings. So because we've had these 10 years of outperformance of tech stocks, people have said that's because of diversity. No, it's just a sectoral swing. It's nothing to do with how diverse your workforce is. But the problem is you then get funds like BlackRock saying we will invest on the basis of how ESG friendly a firm is. And naturally the group thinks that no one in the media dares challenge this nonsense. No one in the city challenges this nonsense. No one challenges it. So money flows into BlackRock because people say, oh, the BBC's told us that diversity leads to outperformance. So it's got even more money to spend, and it invests in stocks not on the basis of how cheap they are on fundamentals in terms of earnings and dividends and things like that, but just because they've got lots of lesbians on the board, and they are overpaying for those stocks because they've had such a great run. And in the end, investors in BlackRock will do their conkers as a result because all this money is being pushed to overvalued stocks.
So when it comes to individual examples, I mean, you've mentioned BlackRock, which, yeah, absolutely, they're a huge name. There are various examples, aren't there, of companies that have really pushed the ESG idea and fallen on their own swords. I mean, my first thought is, for example, John Lewis, and also certain airline companies. Can you come up with a few that have...
John Lewis under Sharon White was a great example of this at every level. Sharon White is a female person of colour, beloved by the media class, and she was always on the BBC. I mean, she more or less had a sort of sleeping bag in the Woman's Hour studio. And she was put in charge of John Lewis despite having very little retail experience. At a management level, she blundered. So there was the saying, well, the way to take our business forward is to invest in property. Well, that cost them a packet. Just bad retailing, not having stock in place at the right time, not investing in customer service, all the sort of things which John Lewis used to do and which used to make it a good company. So she was a bad retailer. But then it was worse. There were these woke things. So we had the Christmas adverts where the only white person was an alien from outer space. And you may say that's legitimate. Fine, you can spend your money on what you want. But if you're doing that, the traditional John Lewis customer is older than we are, and they're small c conservative. It doesn't grab them. And hence there was failure at an operational level. And we've seen it with other firms which have gone down that route. I'm trying to remember the name of the American store. There's an American store chain which had a thing for Pride Month and Transgender Month, which was having binding things for
Yes.
11-year-old girls and all
Yeah.
sorts of stuff, and they're having it right front of store. Most of its stores were in the Christian South, and which idiot came up with that? Because it obviously alienated its customer base. The best example, of course, is Anheuser-Busch, Bud Light.
Bud Light.
Bud Light is a drink. Oh, it tastes disgusting, but it's a drink drunk largely by blue-collar men. So what do? They hire Dylan Mulvaney, who is a transgender person from TikTok, also a very annoying person, who obviously hates sport and hates all the things that Bud Light do. And it hires Dylan to be their poster person. And there was an enormous backlash. And initially, Anheuser-Busch says you're just being homophobic. They double down on their nonsense and eventually they drop it. But there was a massive drop in Bud Light sales. And actually, in a lot of Budweiser sales, it took a real hit. So which idiot? It would be some Ivy League. Again, it's groupthink, by the way. It's some Ivy League. The marketing departments of big corporations are run by people from Ivy League, what we would call, Russell Group universities. They've got degrees in liberal arts studies, gender studies, and basket weaving, and all this sort of stuff. And they all think the same way. The problem with these businesses is they all talk about diversity in terms of having more women or more gay people or more black people. But what they do is they're having women, gay people, black people who all went to the same universities and who all did the same degrees and who all think exactly the same.
Do you think that we're coming to the point now where more and more people are thinking like you're thinking and are voting with their feet? I mean, we're coming up to the European elections. That's likely to show a big swing away from this type of thinking. So do you think we're at a point now where we're at peak woke and it's going to change soon?
Well, you like to think that, but why isn't Uncle Chris here now? Because obviously, thankfully, we don't have to vote in the European elections because we're out of the evil empire. But you'd have thought that after 2019, when Britain voted for a party which was going to deliver Brexit, that we would have dealt with all of these things in this country. But have we? We had a botched Brexit. We've sold out Northern Ireland. We have more rainbow-coloured lanyards in the public sector than ever. Public sector productivity has continued to decline. And wages and costs in the public sector have continued to go up. There's been no efficiency. The BBC has not been reformed in the slightest. Might defund the BBC T-shirt. It should be defunded, but it's not. It's not reformed. It's still pumping out bilge and fake news. All of those things should have been dealt with by Britain after 2019, but they weren't. So do I think that Europe's going to change if Madame Le Pen is the biggest party in France, which I think she will be, and the European elections see victories for the right in places like Hungary and Slovakia, obviously in the news? Do I think? No, I can't see that it will change because, as we've seen in Britain, the civil servants are pretty entrenched, normally working from home. and that they're going to be there. The public sector is incredibly powerful. You know, we saw during the lockdown how the teachers' unions were berating the government about how they were the most vulnerable people and they had to be protected, when of course that wasn't true. Death rates amongst teachers were incredibly low. Death rates amongst their pupils were almost non-existent, but still they had to have the most. So no one dares challenge them. No one dares challenge the doctors. You know, doctors are incredibly well paid. Absolutely incredibly well paid. One of the reasons we have a shortage of doctors is they earn so much and have such a ginormous pension that they can afford to retire early. In fact, you know, they've reached the pension limit by the time they're 55. So, but no one dares challenge them. You still just bang your pots and pans. You want a big bumper pay rise, you can have it. See you on the golf course. And nothing's changed in this country. So we've lurched to the point where we now have the highest taxation rates for 70 years. We have debt to GDP rates, ratios. Even if you ignore fiddles like student loans that won't be repaid, PFI debt, if you ignore that, our debt to GDP ratio is pretty close to where Greece was before the financial crisis. And that was after we had a government elected with a mandate to tackle all this nonsense.
Yeah.
And it hasn't happened. So do
No.
I see things changing in Europe? No, I'm afraid I come to the conclusion that the West is pretty doomed. Teach your kids Chinese and Hindi.
Well, when it comes to, a situation where you feel we're doomed, again, for investors, where do you look? Are we at a point where it's actually a good idea to look for companies that have very low ESG? Therefore, you would hope low groupthink. Is that really something that investors should consider, or is it still basically the fundamentals, that having a low ESG doesn't necessarily mean that you're going to be profitable?
I think if I see a company which produces vast amounts of documentation showing that it's ESG friendly, I put it down as one black mark. I don't necessarily say it's a red flag. It's not a company that I'm definitely going to ignore. I don't really like it. One of the problems is I have a great friend, Sam Antar, who was a fantastic fraudster. He was the CFO of a company called Crazy Eddie's. When I lived in New York in the 1980s, it was the go-go stock, and it was a complete fraud from top to bottom. Sam is a genius, and we talk and we say Sam is these days a fraud buster. By the way, he's straight now. But if we were to launch a company that was a fraud now, we would go big on the E and S. We would have big reports about how diverse our workforce was. We'd be donating vast amounts to the Pride marches. We'd talk about how we're going to be net carbon zero by next week. All this rubbish. Meanwhile, the G would be rubbish, and we'd just be stealing all the money because that's what fraudsters do. But you put up the smokescreen of ES. So I tend to ignore that. You've got to look at fundamentals when you're valuing a business.
So finally, for the relatively novice investor, when it comes to picking companies, I mean, I would say for a novice investor, go for funds anyway. But if you were going to go for funds even, but certainly if you're going for companies, ultimately it's the numbers, I'm guessing, that you have to rely on. You cannot rely on, as you say, the tipsters, many of whom are actually paid to tip nicely.
You know, you're absolutely right. And by the way, you are completely right about shares. I have this bloke who emails me more or less every day about a particular share he's invested in, and he panics. I can sort of envisage him there wetting his knickers because the share's down by 1%, and he says down by 1%, it means it's going to be a disaster. And I've actually said, you know, he pays to subscribe to my website. I think you should cancel your subscription, and you should not invest in shares because you haven't got the temperament for it. I know the shares are cheap. I believe the shares are cheap. And, you know, shares do move up and down and up and down. If you don't really, you should only invest in something you really understand. And shares is kind of complex. I don't claim that I get it right all the time. And I've now been working in finance for, we don't need to go into that, but a very long time. And I've got better over the years. I'm definitely a lot better than I was at the start, and I get better every day, I think. but I'm still not there. So if you don't have that knowledge, you really shouldn't be investing in shares. Funds is much safer, but even there, they're not safe. Now, the classic point that it's not guaranteed safe. The classic one there, and it's back to groupthink, is Neil Woodford. Neil Woodford was the man described by the BBC or the Daily Mail, one or the other, as the man who made Middle England rich. He was the most celebrated fund manager of the 2000s. And to his credit, one thing he got right was he saw the dot-com bubble was a bubble, and he didn't own any of those stocks. He invested in boring old economy stocks on PEs of 4 and did very well. But towards the end of his time at a place called Invesco, he started to lose the plot. And actually, the day after he resigned to set up his own place, the FCA fined Invesco and wrapped it for numerous rule breaches, all of which were Neil Woodford. That should have been an alarm bell, but it wasn't, because he went on to launch his own funds in 2014, I think it was, or 2013. And the press coverage was unbelievable. Everyone was praising him. Everyone. The Mail on Sunday, Jeff Prestwich was the biggest sinner. He would be praising him every week in return for an exclusive interview. It was obscene. From 2015, we started calling out Neil Woodford. And I did about 1,000 podcasts, articles, and videos. And I gave presentations at conferences to 1,500 people about why Neil Woodford would end in tears. And my work was recognized when Panorama did a thing on Woodford. It came up to my house here in Wales and filmed my cat and interviewed me. And so the work was recognized. Woodford, at his last public meeting before the balloon went up, I attended that meeting. And he called me out in the audience saying, I have been attacked by certain people in the press, and the worst offender with his fake news is there in the audience, Mr. Winnifrith. And I said, look, Neil, if I've ever got anything wrong, you just need to drop me a note. I'll run a correction. What have I got wrong? But he couldn't say anything. And the truth was, I got it right. So there is a danger there. That was a groupthink again, is that everybody, the entire media was blowing off Woodford all the way. Eventually, in the last few months, people started asking questions, but only in the last few months. That's in 2019, when his empire collapsed. My first critical article was 2015. The financial services industry, Hargreaves Lansdown particularly, was pushing Woodford aggressively. Hargreaves Lansdown, incidentally, was its own in-house funds were selling Woodford shares, whilst it was telling people to buy Woodford shares. But so everyone was pushing it. It was a groupthink, and it was a bad investment. And you see that there's a fund in America, a tech fund, ARK, which again is sort of the Woodford on steroids in America. But again, there's a sort of groupthink following that fund. So you can come a cropper on funds as well. But there are good, safe funds. And you probably, if you don't know about shares, you should have a little bit of exposure to American equities, I suggest, a little bit of exposure to emerging markets, because they are far more dynamic economies and they will continue to be more dynamic. But you should generally match your assets to your liabilities. So have most of your exposure to UK equities. And there are safe, well, nothing is safe, but there are reasonably well-managed funds out there that can help you.
Great. So the other thing to finish off, Tom, is if people are serious about finding out about different companies and what's really happening in the city, they need to sign up to Share Profits, don't they? How do they do that?
Of course they do. Of course they do. But I don't want people coming there who's saying they know nothing about shares and they can't afford to lose money. We write Share Profits for people who are knowledgeable and serious. And if you can't afford to lose money, you just shouldn't be buying shares. You should only use money you can afford, not only to lose, but that it can be tied up for many years.
Well, thank you so much, Tom Winnifrith from Share Profits. He has been talking to me, Jasmine Birtles. This is the Tin Hat Money podcast. If you enjoyed this, tell all your friends, like, subscribe, do all the usual, put it onto social media and tell me how fabulous it is. Thanks for watching, and thank you very much, Tom.